With new trade wars surmounting globally, where does India stand? To talk more about this, we have here with us DK Joshi, who's the Chief Economist, CRISIL. Pleasure to have you here, sir.
Happy to be.
Sir, I want to start by asking you that there's a lot of news about U.S. tariffs. What sort of effect do you expect that it can have on the Indian markets and on a lot of sectors which are could be affected by it?
Well, I think all I can say at this juncture is that this is ongoing, and we do not know where the tariffs will finally settle. But till the time that decision is taken, I think we have a lot of uncertainty, and uncertainty is not good for decision making, is not good for markets. So I think we'll see some volatility till the time I think the final settlement is there on what the tariff regime is going to be.
Overall, in industries, do you feel certain sectors could be more affected if any sort of tariff is put on the country?
Well, it depends on, I think, what tariffs are put on. So it's a little speculative right now to say what will happen.
Also, sir, what do you have to say on the weakening currency against the dollar?
Well, this is again a result of uncertainty. I think the capital is flowing back towards US. I think so that is leading to pressure on the dollar is strengthening. So it is not India specific. I think all the emerging markets are facing this weakness. And instead of capital inflows, we're getting capital outflows. So the rupee does weaken, in this scenario. And that's what we are seeing right now.
Okay. And do you see it further continuing to sort of depreciate further?
Well, I think if you look at the previous episodes of rupee depreciation, I think there have been episodes of sharp depreciation, but the rupee also corrects after that. And I want to make a point right here that if you compare today's scenario with 2013, in 2013 we were very vulnerable. So even a small talk on the taper tantrum led to a lot of volatility. Right now the country's macros are pretty strong. We have low current account deficit, we have low external debt on the government. We also have fiscal deficit which is being reduced. So the macros, we are not fragile anymore. It's just that the shock is too big. So that is why it is creating volatility in currency. And I think this will smoothen out as it has happened in the past episodes.
And what sort of effect do you see the interest rate cuts which happened recently can have on the economy and the industry?
Well, we've just seen one rate cut as of now,
Yeah.
and I think the rate cuts do have a lagged impact on the economy. Maybe they impact the economy after 2 to 3 quarters. But what might happen quickly is the housing loan part, I think, which are now getting increasingly reset on the basis of repo rate changes. I think we might see some burden coming down on the EMI payments from that.
All right. And what's your review on the budget? Like a lot of push was given to consumption, startups, and industries. So, what is your view on it?
Well, I think the budget has focused on drivers of growth. Earlier, it was the government investment which was growing faster than the GDP, firing growth. Now, I think there has been some push to consumption, particularly which is going to benefit the urban areas, because the income taxpayers up to 12 lakh will get concession, and this is not one time. This will play out year on year. So this is kind of a durable shock to positive shock to income, and that will lead to more consumption, I think, particularly for this category of individuals.
And do you see the private capex also picking up?
Private capex has been a little sluggish. I think where the positive news is on the deregulation, decriminalization of laws. If those things happen fast, I think private sector is very capable of investing right now. They have much better financial flexibility. Their balance sheets are very healthy. And if I think the ease of doing business part also improves further, I think as has been talked about in the survey and also in the budget, I think we'll see private investments also pick up gradually. It's not that they're not happening, but they're not happening on a massive scale, so that is awaited.
Okay. And what's your view on the commodity market? Because when a lot of trade wars seen happen, then there's a lot of effect which can be seen on the commodity market. So what's your view on it?
Well, I think in general, I think you see oil softening. So I think if our sense is that generally, I think we'll see softening of commodity prices, which is good for us. I think oil softening is very good for us because we depend so much on oil imports. So I think, and it is also offsetting partly the increase or the depreciation of the rupee, which makes imports expensive. But the price itself coming down for oil is a good thing for us.
And what about the other commodities, if any view?
No, we don't have any view on the other commodities.
Okay, and my last question to you is that what is your vision of India going forth in terms of economy?
Well, I think India already has a track record of high growth. I think it's grown at close to 6.3% per annum for the last 3 decades. And our expectation is that till the end of this decade, which is till 2030-31, we'll see about 6.7% GDP growth, which will make it a 7 trillion economy by 2030-31, and the per capita incomes will rise from 2,600 to about 4,500. So you will see a lot of consumption support coming from the rise in per capita income.
All right. Thank you so much. Thank you for joining in.
If you like the video, do like, comment, share and subscribe.